30th. Wow, what a friggin' crazy day. I'm going to wait for them to give me the link because I'm doing a public recap considering we've had some volatility and a lot of things going on. So I want to make sure that, anyone who needs a little extra help can get a little extra help from the Red Dog because that's what I like to do. Believe it or not, I do like to help the greater good. And, I think from my video that I love, that I always say, what do they say? If you're not making someone else's life better, you're wasting your time. And although I do have a product to sell, it's really to help everyone else out there that's trying to do this so they don't do it alone. So anyway, I'm retweeting right now. Here is my public recap. All right, here we go. Hold on, everyone's calling in and stuff. Crazy day today. Let's see. Okay, I'm going to do a little education too as well. All right, sorry if you've been waiting to get into it. So let's get going. Hello, my name is Scott Redler. Let's go here first. I am the Chief Strategic Officer of T3Live.com, and welcome to today's recap. Let me line up here. A lot of volatility since last Friday. A lot of ways to maneuver. Very, very fine line between making a little and making a lot, or losing a little and losing a lot. So many different types of names on the move. So many things to maneuver with. Either a portfolio approach, whether you were taking off names, whether you're putting names back, whether you're playing ranges. The key to it all is just being prepared. Every morning I try and say, good morning, just to let you know I'm up at 4:45. So if you're seeing my tweet and it's at 9 o'clock and you're on the East Coast and you're just getting up and you're a trader, you're not getting up early enough. You're not getting prepared unless you're just all of a sudden reading my note and saying, hey, Red Dog will do it for me. But still, you're not getting up early enough because you need to really, get prepared because there's so much going on and so much to do and so many different tactics to use. So first, this is a chart in the S&P cash. Before we get into that, I need to show you for compliance purposes the VTF. So here's the VTF. This is what everyone they talk all day long. They call it the Trader Hub. If you look at what people were talking about before, a lot of a lot of happiness, right? A lot of us were in a lot of Amazon. 2050 all-time high, 2100, blah, blah, blah. I think everyone made a decent amount of money. Where's a bunch of guys? Anyway, who cares what everyone else made money-wise? So what they do is they get to see me, at my positions. And believe it or not, since Friday, I've gone from 20 positions down to like 5 or 6, and I've kept a lot of my options on, and thank goodness, we'll see how things work out tomorrow, but we're looking pretty good. So Amazon, you'll see I'm flat. I'm not shorted. Short is here, long is here. Amazon, I just traded when I went through 1920, and I made some good money there. But I was positioned in options, and I a lot of times on my charts, I talk to you guys about my lotto spreads on Amazon, thinking that if Amazon wasn't as bad as everyone said, and after sitting for 2 years in a range, and it's the most, it's the best brand out there that everybody uses. I think 2 weeks ago I talked about how it was rated the best brand in the world, and it was still not at an all-time high. I was like, we could buy the 2000s, sell the 2070s. My cost is 10. You can make 60. So if you buy 10 of them for 10 grand, you can make 60. If you buy 20, you can make 120. If you buy 5, you can make 35. If you buy 1, do the math. It's all different for everybody. So that was the first call spread that I put on. And then I just started putting on more of them, as we got closer, as I was, building my own conviction level. So if you look here on the virtual trading floor, you could see I'm long the Amazon, which I bought today at 936 because it shows you when I got long it. So today this was a new one. I bought at 1880. So I have a bunch of call spreads on. And I have actually some free clear calls too. This I think was the free clear ones. This I had overnight. These were the 1910s. Okay. This I had on overnight. This was the lotto spread that I had that you've seen on the virtual trade floor for 2 weeks. Here long pointing at the 2000s and then short the 2070s. Okay. So the cost was $10 to make 60. Not a bad risk reward. And then I also, at the end of the day, I'm like, you know what, screw it. I'm going to go out one more week. I'm going to buy the 2000s, sell the 2010s. I'll risk $1 to make 9. You could do 10 of them, 20 of them, 30 of them, whatever you want. So that's what this one is. This one is for next week. I bought today at 3:49. That's the time. So the VTF gets to see the time also. And then I sold the 2010s, but I should have did the 20s. Same exact time. So I risked $1 to make 10, so that's $9. If you did 10 of them, just I'm going to put $1,000, you make 9. If you did 100, you know the math. And then when I put a little bit more money on, because I felt it was a little bit more, if it didn't have to be a lotto spread, was this one, which I had overnight too. This was overnight, this was overnight, this was today, and I think I had one more, which was today. So, so what is that? That's 1, 2, 3. So 4 different options. One of them is free and clear, and 2 of them are lotto spreads, and one of them was just, a way that if it was good and it bounced $100, I would make money and it would cover all my lotto spreads. So instead, right now, with Amazon, being where it is, I think it's at 2100. It's at 2100 on the nose. I seem to be okay. I just needed to end above 2070. So that's that. That's just Amazon. I specialize in looking at high beta tech names and trading them. I've been doing it for 20 years. I've been talking about Tesla. Tesla was a tougher setup. Last quarter was the same kind of setup I saw in Tesla. This quarter in Amazon and Tesla. This time was a little bit more difficult. I did, if you look over here, I was long the 600s, which I didn't make a lot of money on. I bought them from like 18 and I sold them for over 30. So now like 100%, it's not a lot of money. And then the 700s, which I had overnight, I bought them for like $1.50 and I sold them for $1 and I lost 50 cents, but that was just a lotto spread. So one was a realistic spread, one was a lotto spread, one covered the other. And, granted, the majority of my money has been made from 350 to 650 or before 6. So I didn't love this setup. That's why, I wasn't as involved. As far as leftover positions, like you could see, I got out of, I traded Microsoft. Actually, I shorted it. Yeah, Microsoft, Red Dog shorted something. Everyone's a Red Dog, you never short. I'm like, I shorted versus the opening 5-minute high. I made a little bit of money, whatever. I shorted. Look, 920, Red Dog actually got short. And then, I shorted more within there, and then I covered and whatever. It is what it is, just a trade. Roku, it's tight. I got at the end of the day. CGC, I had overnight and I sold some into strength. And yes, I did lose money on SNDL. Okay. I had it overnight, and then you could see I was done with the trade by 9:59. And I tweeted to you guys and let you know it was at $1.90. Listen, that was me losing, that was me actually getting my high too high. It's like a lesson. Okay. We traded Sandal, or whatever you call it, SNDL. First time we bought it at 2, went down to, 240, went down to 2, sold some above 3. That's a nice percentage gain. Then it hovered again, bought some around 270, then I sold most of it above 375. Grand slam home run. So what happened was I got a little ahead of myself. I was holding 18, 19 positions. I'm like, you know what? I just sold it above 375. Let me buy some at 310. Let me buy some at 270. Then I bought more at 240, saying, oh, it'll be fine because it's just one of these wellness names, blah, blah, blah. And then PS, CEO left with the COO and the CEO leaving in a horrible sector. I'm like, you know what? Let's see if it bounces. And it bounced to $2. I sold some. And then once it broke $1.88, I'm like, I'm done with it. So I took a big loss in that today. But it happens. We made good money before, which you don't remember. You only remember the P&L of the day. And anyway, and then I still have some lift that I've been holding for a while. I trimmed some into strength. I'm still with it. And then these 2 trades I bought more are my thesis bios that I'm hoping for good positive news that there's a lot of trials going on, and that I don't have a stop in. That I bought lower. I've accumulated. Those are a thesis I think comes out with some kind of great news soon, but it's not for everyone. So anyway, let's go to the charts. S&P. Today put a higher low in. This was Monday's low, 32.34. Today was a higher low. We'll see what happens tomorrow if it can clear 33.01 or not. This is the high here. This, if you sold when you did a little Red Dog reversal at 33.26, you were able to, buy some back. I covered most of my SPYs, which I tweeted to Redler All Access, almost near the lows. So I was able to put some more back towards the end of the day, which is how I've been maneuvering a hedge, even though I don't have a lot of longs. As far as Apple, I didn't even trade it today. Some guys bought it when it reclaimed this 33.21.38 after putting in a doji. It filled a portion of the gap. Look at that. Actually, pretty damn good trade. I should have done it myself. I said you could be a buyer at 318 at the 8-day, which it hit. And then let's see if it reclaims 321, which it did. I wish I would have been more active there. I just had too much going on. But all in all, this was pretty good. So at this point now, you could say, hey, the trade has changed. Now, if you bought it today, you could stay in it and put your stop in at the lower today. So if Apple holds the low of today, you can't get too upset considering the size of the move that it had, from last quarter's earnings. So I missed the trade. Yes, I don't catch all the trades. I was too busy, overly focused everywhere else. But this was a nice clean trade. You could have bought the 8-day, added when it took this back, and tomorrow it'll probably be up a little bit. Interesting. Facebook I didn't touch. In my morning note I said there was support from like 203 to 206, and it did get to 203 to 206. That's why I mapped stuff out. Went to 204.75, and then retraced a little bit. Now you have a big hole here. So at some point we'll see, does it fill this hole? Or not. I personally think the high is in for Facebook for a while. This is the gap here. Now, what was today's high? Today's high was 211.43. Let's put 211.43. That's a new point of reference. If it's going to get in the gap, it's got to get above and stay above 211.43. So this is on my game plan. I did not have options for Facebook. I didn't love the setup up here at highs. And I just fundamentally, with all the legal costs and the expenses, I was like, I'm just not touching it. I don't need to. It reached my 220 format or what's that called? Target. Yeah, target. Well before, and that was in my 2020 note, so I didn't have it. So anyway, this is your gap. We'll see what happens here. It did wind up holding this spot. You can move this up now. This is your new point of reference. This low here is 204.75. If it even really touched it, I don't really remember if it did touch it, but that was the spot. So let's see if I have my language from today in this still. I don't even know. Is it here? No. So anyway, that's where it is now with the hole. We'll see what happens there. I am long Netflix. I bought it today versus this area. Okay. Didn't make a new low. I was buying it around 341. Now we'll see, can it hold here, take this out and become better? Ever since earnings, it got back in the game. Why did it get back in the game? A big igniting bar to take out this range, held half of it. So to me, that's decent, better than some other things, and it's not extended. And also, this hasn't done anything for 2+ years. So I'm trying to figure out if it can get better. Look, Netflix woke up the day after earnings. It did well as it cleared 345. I might take a look versus a 5, 15, 30-minute low. 343 to 345 is active support. That was actually the day before. But anyway, it's fine. It looks decent here. I bought some Roku just to follow. I haven't been in Roku this entire year, but to me, it's getting really tight here. So I figured let me just watch it a little bit. It was stronger today, so I bought a little bit. I don't love it, but we'll see. It's kind of really reclaimed the moving averages. So I'm only in a feeler. I'm not even in a tier 1, so don't buy it because you see me in it. We'll see how it goes. Microsoft, they did short versus the open, and I covered. I do think that this, fills a portion of this gap. If you look at the 1 day, you could see how, you could have used it with the plan. This was your opening print, and then I did get short around here and say I'm short versus the high of the morning. So that's your 5-minute high. It did come in a bit. You could have made some decent money. I made some decent money short. Yes, I shorted. I faded in my note. I said I would not be a buyer on Microsoft on this open. It's come too far. It needs time. And then I showed you guys an example of what I mean by time, which was Intel. Intel, had a big gap up. Next day it was down. And basically, actually, this did a little bit of a red dog reversal. This looks a little bit better. But, you couldn't buy this first day. Otherwise, you might have hit it out here. And then been, oh, my God, it's up. Let me buy it here and hit it out. And now, all of a sudden it's consolidating. So all in all, a little bit healthier here. So anyway, that's Intel. Hit the 8-day. Hey, look at that. You don't buy things so extended from the 8-day. You buy them when they hit the 8-day, and the 8-day is considered the strong momentum trend. Another lesson to learn as you go through these charts. Hopefully you've already downloaded my book, and if you want, if you're not a member of Redler All Access, this is it. Click on this, t3live.com/RA. Sign up for a month. All right, if you're not reacting well and you're not prepared and you need help with a game plan, you need to learn why I put my game plan together, and you need just conviction and confidence, I breed that to a lot of different people. So there it is. Okay, let's get back into what we have going on here. So let's go into Amazon again, why I was so bullish on it. Just look at the size of it, look at this range. First of all, this was the huge increase. Okay, so for it to go sideways for 2 years is not the end of the world. It's consolidating a huge move. So to me, everybody was getting just a little sour. Okay, so what did I think? I said, okay, after hours, if it gets above 1918, it can get to 1970. If it's going to be for real, it's going to clear 2030, 2050. I posted this chart in the public Twitter about 2 weeks ago explaining my call spread that I have on, which the risk reward I thought was great. Better than the risk reward of Tesla last night, which I still had some options on. And I didn't love the risk reward of Facebook. That's why I didn't do it. I didn't even take an Apple, option strategy. And you know how I love to be in Apple. I didn't feel like I was missing anything. It was too difficult. Anyway, here you are. And at this particular point, it cleared a lot of damn pivots. And tomorrow I have to actually come into the city instead of working in Short Hills because I need to manage my options because I don't have my options platform in Short Hills and I don't want to kill trade support managing it because things are going to be moving around fast. So anyway, this was a really nice base. Now it took out 1920, which I bought on the VTF, sold some into strength, and I kept all my options, and we'll see how it goes tomorrow. Whereas 453, let's see where's Amazon is. Please still be above 22,070. It's at 22,094, so we're good. Tesla, what a move. Jeez Louise, very extended from the 8-day, so might need some time to, consolidate above this gap. I don't have anything long right now in Tesla. I had 2 call spreads coming in today. One made money, one lost a little, but one covered the other. My real big call spread was down here because sentiment was horrible, and I thought maybe it's time to take this out. And then again, remember the Cybertruck? Cybertruck, everyone's beating up me, which wasn't really nice. Don't be a fair-weathered friend. That was here, and then right here I got back long again the stock and 2 more call spreads, and now look, boom. So anyway, what's this low today? This low is 618. As long as it holds 618, you can't get too bearish on Tesla. It is a little extended, so I wouldn't be going cajones to the wall and buying it. With a little bit of time, let the moving averages catch up, and then maybe it takes out the post earnings high of 650.88. But we'll see. 650.88. That is your new chart for Tesla. Okay, and we'll see how it goes. Don't use your opinions, use your moving averages. Look how many times Tesla held the 8-day right here, held the 8-day right here, held the 8-day right here. Shouldn't have bought it extended from it, shouldn't have bought it extended from it, shouldn't have bought it extended from it. Not rocket science. I should be a gazillionaire. I shouldn't be talking. No, I'm kidding. I'm evolving myself. You have to educate, you have to put out the plays, and you have to also run the routes. I try and do all 3, and I could do all 3 better, which I'm trying to do. I do appreciate that a lot of you guys didn't beat the hell out of me today with SNDL, because you all know that, we had this particular move down where we bought it, sold some, added here, sold some, added here, and I tweeted to you guys, I said I'm done with 75% of my long. So everyone had the same opportunity to almost make 75 to 100% on their money, depending where they bought it. And then right into here, when it broke the moving averages, I broke my own friggin' rule. I was like, I have 20 positions. Let me just buy some back. Then I bought some back, and then I bought some more back, and then I bought some more back. And then all of a sudden I have more than I had here. And I'm like, why is it down here? It's not acting well. Oh, it's a small cap. Oh, it's in the cannabis sector. Oh, it's a wellness name. I made all these excuses on why technically it didn't act well. And then all of a sudden, news came out. I'm sitting here at 8:40 in the morning. Everyone's like, Red Dog, do you see SNDL? Do you see the news? You see? I'm like, come on, I'm doing my work here. I'm like, holy shit, this is my COO and CEO left. That's not good in a sector that's been battered and bruised. And, granted, I don't think they need money. So that was like, I don't think it's going bankrupt because it did it all here. But I'm like, you know what? I'll give it to, a 5-minute low. I'll watch it trade. It opened at 190s, trade up to 2. Hovering there, I'm like, you know what, let me give it a half just to be safe. And then once it broke 190, I'm like, I'm out. I tweeted at 190 that I'm done. I'm sorry. It happens. I want to move on. That's when I actually sold my Crone because I'm like, you know what, I don't need to be in this, which was a push, thank goodness. And I sold some CGC into strength, so all I have is CGC, and then, it closed down here. That's sorry, it happens, but I did what I can. I salvaged it. I didn't buy it the whole way down like I did here. I got out at $1.90. And everyone had the same chance with the same volume there. Okay, so if you look here, this is how you do it. It gapped down, tried to rally, okay, couldn't go. And then I said to myself, you know what, my out is, what I'm in control of. I can't control the news flow, but I can control my out. Okay, you could have 50,000 shares and still sold it there. Because chances are that's probably what happened with me. So this was right here, $1.90. Better than selling it at $1.55. So I feel like I did my job. I managed the situation. That's all you could do is manage the situation. You know, you're playing blackjack, right? You're playing blackjack. You got the rules in front of you. You get, you know, pair of, what do you get? A pair of, what do you split on? I would split on a pair of eights. You're like, okay, I got to split that. It's a 16. You get a pair of eights. You split it. Okay. You know, then you get a 3, and then you get a 2. Oh my goodness. Okay, now this hand's okay. Let me double down here. Put it down. So you now have an 11. You're supposed to double down on an 11, even though you have 2 hands. You don't. And then all of a sudden you get a 2. Oh, I got to double down over here. Get it down. And the dealer only has a 6 up. So you're like, wow, okay, he could bust, and I have 2 good hands, and blah, blah, blah. You turn over your card here. It's a 7. You have 17. You turn over this. You got a 5. And now you have 16. Like, holy cow, I hope the dealer has a 10 underneath so he could bust so I could salvage it. You know, dealer turns over a 4 underneath, gets a 10, and takes all your money. Did you do the right thing? You did the right thing, but you still got cleaned out. All you could do is the right thing according to your process in this market. Otherwise, you know, you have no process, and you're not gonna have longevity. Because if you have a good process and a routine and a plan, losses happen. Bigger losses don't have to happen, and you get to move on and use your process so it doesn't happen again. I actually broke it by, you know, by adding back when that thing didn't look so good. Anyway, let's move on from this disaster. Sorry, again, it happens. Anyway, CGC didn't look so bad, but I still sold some just because you know, just the memory of the group. And we were buying CGC here, sold some, bought it here, sold some, was looking awesome here, added here, sold the majority. I actually did the same thing here. I sold some, but I held some. I could have been buying here, and then all of a sudden it could have kept going down and down, kind of like what happened here, which we weren't in for. And I could have got screwed there too. Instead, it got upgraded and it looked better. So I kind of was like, you know, if the leader is doing okay, maybe it's just, you know, a fund that needs to get out. So I made excuses. So whenever you find yourself making excuses to stay in a trade, get out of the trade, because your inner voice is telling you, move the hell on. Anyway, let's go to Lyft. Lyft still looks pretty damn good. Hanging in here. I'm still long. It gets above 50. I think it's an add. Some of you guys are still in ICE. I am not. Wow, that was a nice breakout. I bought it in here. Added. I think I sold it on maybe this day, which was short-sided, but whatever. It's continuing to go. If you're still in there, congrats. And just continue to do what is in your risk tolerance. Manage your portfolio approach. Use your moving averages. Use your charts. Use your tier system. Use your tool belt to help you continue to make progress. Bad days happen. Blow it off. Go do something after work that's going to make you happy and put a smile on your face. Good days happen. Don't get over your skis. I got a little bit over my skis with too many positions late last week. That hurt me on Friday. Felt good Monday, and then, you know, today wasn't a great day P&L wise until Amazon crushed it, and now I'm back at the highs of my month before where I was on Friday. But I'm gonna relax, and hopefully you guys did well too. Tomorrow's Friday. Go out, have a beverage, and I'll see you in the morning. Good night.